Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John and I write on regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. John, income investors like energy stocks because the world runs on oil and will continue to do so for the foreseeable future. Moreover, energy stocks make a lot of money and provide some of the frothiest dividends on the Wall Street. While the outlook for crude oil has turned bearish, one bullish energy play that recently is hitting record high and continues to have a great potential is Pembina Pipeline Corp. They're traded on New York Stock Exchange under symbol PBA, and they're also traded on Toronto Stock Exchange under symbol PPL. John, what can you tell us about this company?
Well, an oil and gas midstream company, Pembina stock has actually been having a decent year, rising approximately 4% over the last 6 months and 9% year to date at least of this recording. Pembina stock hit an all-time record high of $42.40 per share on October 6th. Now it has pulled back a little since then to around $38 and 12 cents per share. Now, despite the solid gains, Wall Street sees Pembina hitting fresh highs over the coming months, with analysts providing a 12-month share price target of $41.34 per share to 45.72 cents per share. This points to potential gains of approximately, 8.5% to 20%.
And there are some reasons to remain bullish on Pembina Pipeline. It's been reporting solid financial results, providing robust guidance, recently entered into a major export agreement for liquefied natural gases, LPG, and it continues to expand its pipeline and announce new acquisitions. And let's be honest, for investors, Pembina also provides a reliable high yield dividend. It currently provides a quarterly dividend of 71 cents per share in Canadian dollars or $2.84 on annual basis. That equates to a annual yield of 5.32%. Now, John, let's get into the what this company actually does.
Yeah, Pembina Pipeline Corp is, as you mentioned, energy midstream company. They're actually based in Calgary, Alberta. They provide energy transportation and midstream services. The company operates through four segments: partnerships, pipelines, facilities, and marketing and new ventures. Through the partnership segment, it has a relationship with the Alberta Carbon Grid, Cedar LNG, which is actually a floating LNG facility, and Chinook Pathways, and that was formed to pursue ownership in the Trans Mountain Pipeline. The pipeline segment, meanwhile, provides customers with pipeline transportation, as you would expect, terminaling, storage and rail services in key market hubs in the US and Canada for crude oil, condensate, natural gas liquids, and natural gas. And finally, the division manages pipeline transportation capacity of 3 million barrels of oil equivalent per day, above ground storage of 10 million barrels of oil, and rail terminaling capacity of approximately, I think it's 105,000 barrels of oil equivalent per day.
And on the numbers front, I see that it reported a solid second quarter.
Yes, and for the record, all figures are in Canadian dollars. The company reported second quarter earnings of $417 million or 65 cents per share, and it just reported adjusted EBITDA of $1.01 billion, an adjusted cash flow from operating activities of $698 million or $1.20 per share.
And looking at the guidance, it tightened it up a bit.
Yeah, Pembina updated its 2025 adjusted EBITDA guidance range to 4.225 billion to 4.425 billion from previous guidance of 4.2 billion to 4.5 billion. Looking ahead, due to seasonal and asset-specific factors, Pembina expects third quarter results to be consistent with second quarter results, but it expects to report stronger results in the fourth quarter.
Now let's talk about something income investors are really interested in. Pembina increases quarterly dividend to 71 cents per share.
Yeah, no, it's better than a stock trading near record levels, one that's also raising its dividend payout. Back in May, Pembina increased its quarterly dividend by 3% to 71 cents per share from 69 cents per share. In August, it maintained its quarterly payout at 71 cents per share or $2.74 per share on an annual basis for forward yield as of this recording of 5.32%.
John, thank you so much for your insights. Pembina Pipeline Corp is a great pipeline stock reporting solid financial results. This helps it provide shareholders with growing annual distribution for years and counting. It also provides shareholders with reliable long-term capital appreciation too. Over the last 5 years, with dividend reinvested, PBA stock has provided a total return of 150%. Without reinvesting dividends, the total return slips to 74%. PBA stock is also trading near record levels, but Wall Street analysts expect that momentum to continue and for PBA stock to hit fresh highs over the coming quarters. And all of this is good news for passive income investors and the 692 institutions that hold over 64% of all outstanding shares. The three of the biggest holders include Royal Bank of Canada, Vanguard Group, and Goldman Sachs Group. That's it for today, and make sure to go to incomeinvestors.com now to see what we write on a regular basis. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.